Welcome back. It's earnings all the way. So let's get chatting with the management of Happiest Minds as well. We have with us, the management. It's also acquired 100% of PureSoftware Technologies for about 780 crores. The acquisition strengthens their capability in banking, financial services, insurance, healthcare, life science verticals as well. Venkatraman Narayanan, who's the managing director and the CFO of the company, joins in. Thanks a lot, Mr. Narayanan, for joining in. First question, of course, the revenue growth rate of the acquired company, PureSoftware, is strong. What are the margins, and will this deal or acquisition be EPS accretive?
This acquisition has been in the offing for a reasonable amount of time, but once we decided to go forward, we have progressed quickly on it. This is EPS accretive from day one, and as far as margins are concerned, we are in the silent period. I would like to stay away from giving that out right now because anyway, starting the first quarter of next year, this will integrate into Happiest Minds and the results will be published along with. But I would like to say that it's reasonably good margins and it's a healthy business. 351 crores in top line last year on a consolidated basis. And this adds to, the size of Happiest Minds and helps us towards achieving our goal of that $1 billion by 2031, but also strengthens two of our key verticals, which is BFSI and healthcare. If you look at the business of PureSoftware, almost 50% of it comes from BFSI and about close to 50 comes from healthcare. So it fits in very nicely with what we have been wanting to build internally. So in terms of a fit, it's a good fit, very good people, and it extends our family by additional 1,200 Happiest Minds.
Okay, all right. But what does this do to your long-standing margin guidance of 22 to 24%?
The current margin profile is close to what we are, guiding on an operating margin standpoint. The 20 to 24% that we have been talking about is EBITDA, but their operating margins is fairly healthy and close to what our numbers are. But, integration builds in certain efficiencies. There is room for margin improvement. There is also the aspect of we need to see how we have to invest to get the companies to work together. So there are a lot of puts and takes that we need to go through in the next, 3 or 4 quarters. But the focus will be to obviously keep growing and not at the cost of profitability for sure.
Okay, and what are the performance-based targets on which you've deferred this consideration of 144 crores, which will be paid at the end of FY25?
This will be based on them achieving certain aggressive revenue and revenue growth targets and also margin targets. So it's split between, revenue and margin. And that's how the deferred consideration is being structured.
Okay, and what will the revenue contribution of BFSI and healthcare increase to after this acquisition? Currently, it contributes around 15% each.
So we are currently, let's say, $200 million in size, approximately 15% coming from BFSI and 15% or 14% coming from healthcare. So that's about 30 million each. This company is about $45 million in size and half and half. So that gets added. So there is a pretty decent growth that you will see in both of these verticals, the BFSI and healthcare. Just to rewind a little, a week back, we also announced acquisition of a learning edutech company, Macmillan Learning India Private Limited. So this is the ODC of the global large learning company. So it's not that we have not been looking outside of these two verticals. So that was a small, nice tuck-in acquisition that we did and got integrated, will get integrated soon enough. And that was announced last week. Now, this week, we are announcing this acquisition, which is adding, if you look at it, approximately $25 million each into healthcare and BFSI. I'm just giving an approximate number, 45 million, and give or take some growth numbers. It's about both of our BFSI and healthcare vertical will grow by about 25 million. And now you can work the numbers on how that will pan out on a consolidated basis for the next year, which I don't want to say now because then it would also you can work back guidance and growth numbers for the next year, which we'll hold on to after the first quarter results.
And what about the cash that's left on your books after this acquisition?
We had raised about 500 crores through a QIP last July, adding our internal accruals and IPO last year. We have cash balance of about 1,300 crores, give or take a couple of crores, because we also do quite a bit of working capital borrowing, not long-term borrowings, but working capital borrowing. So about 1,300 crores cash on the books. Post this acquisition, we'll be left with about 600 crores of cash plus quite a bit of undrawn lines of credit.
Okay, all right, Venkatraman, we're going to let you go on that note, and congratulations on that acquisition. The stock is up around 0.5% post that news. We need to take a short break, but it's now time to shine a spotlight on the backbone of our economy. A celebration of your impact on India's success story. CNBC-TV18 and HSBC India proudly present India's biggest SME awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code now and be a part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight.